What is going on YouTube? It's Sankey and I make videos on the stock market. So we've kicked off a fresh brand new week in the stock market, and in this video I want to go over a couple of strategies, give you guys some updates on some of our most popular plays. Now if you've been watching the price of Bitcoin over the last 48 hours, you would know that price has taken a dive due to the strengthening of the dollar. Also, some regulatory bodies have come out and issued warnings about investing into crypto, right? The FCA has even come out and said, if you're investing into crypto, be prepared to lose your money. So that's not going to bode well for a lot of investors. And right now we're seeing a bit of a sell-off in the price of Bitcoin and other cryptos. Now, you know, some of our plays are directly linked to the price of Bitcoin. When Bitcoin rises, they rise. When Bitcoin falls, they fall also. So I'm going to give you guys some strategies, some updates, some tips to ensure that we come out as profitable as we can and limit our downside. Up on screen we have Marathon Patent Group. Now this is a Bitcoin mining play that a lot of us are in and have made some very good profits off. Now as you can see, the price of Marathon Patent Group today has been very volatile because, as I've always said, it's linked to that price of Bitcoin. This just serves as a good reminder for those of you to set your stop limit orders on Marathon Patent Group, your trailing stop losses, right, to ensure that you can protect as much profits as you can, especially if you're in this play for the short term. So I want to put this on your radar. The CEO has recently sold out some of his holding in the company, the equivalent of around 600,000 shares, which is around $13 million. Now, often people can see this as a bad sign, CEOs stepping away before the business goes downhill. This isn't always the case. Often CEOs might sell out to go and pay taxes, or it's just part of their long-term gradual sellout process. He still owns around 500,000 shares, which is a good couple of $1 million. So he still has decent skin in the game. On the flip side, however, what I do like to see is when a CEO buys into a company, this is a good sign of confidence that they're back in the business. Now, we've seen that with a couple of our plays, one of them being Ely's Game. CEO bought in, share price went up, and we made some good profits off that play. Now, this is just something for you guys to remember when you're doing your diligence, right? Is the CEO buying or selling? Okay, so given these two developments, the price of Bitcoin coming down and the CEO selling out some of his portion in the business, Marathon Patent Group is down only 11% right now. Now, I do think this is good, and I do think it could be a lot worse, but I think it is held up by the fact that investors, right, have in mind that Marathon Patent Group is a very well capitalized business. They have a lot of cash on hand. They've gone out and bought a lot of miners with, right? We're talking 103,000. This triples the amount of miners that they currently have. So this is absolutely enormous. So you have a lot of investors, right, who are still back in Marathon Patent Group for that medium to long term, because if they can get those 103,000 miners operational, it is going to cause explosive growth in this business, right, and huge potential returns for the portfolios. So in terms of the strategy for this play, I know a lot over the Patreon have sold out their holding and they're starting to rebuy the dip. Now I do think this could work out well. If you can catch Marathon Patent Group under $20, do consider loading up on this stock. And if this is the first time you're buying in, this could act as a good entry point. Now, like I said, if they can get those 103,000 miners operational, right, this could act as explosive growth potential for this business, and it could work out very well in the short or medium term. Now, if you want to walk away and take profits, that is also fine. I know a lot of you have made some good profit on Marathon Patent Group, and if you don't want to handle the volatility, right, that could play out over the next couple of days and weeks, it's fine to walk away, take profits, and go and enjoy yourselves. Up next, we have Argo Blockchain, another one of our explosive plays in our portfolios over the last couple of weeks, right? It's been a real standout performer. Now, they are down about 20% today, and I want to put you guys on a little bit of game here. So Argo Blockchain, they have a free float of around 75%. What this means is this is the number of shares that are freely available to be traded on the market. Now, if you compare this to a Marathon Patent Group, their free float is around 85%. And then if you just take a FTSE 100 company, their free float is closer to 100%. Now what this means, guys, is the lower the free float, right, the more volatile that play can be. So they can spike up more, and equally they can drop a lot more as well. So this, right, is part of an explanation of why you're seeing Argo Blockchain significantly down today. And now the free float is something that you guys want to be paying attention to when you're investing into some of these penny plays, especially if you have a low tolerance to risk, because it could be a contributing factor to how volatile that stock can be. Now, it's something I want to put on your radar. Argo Blockchain, they've come out and announced that they're going to receive 1,000 miners early ahead of schedule, right, on the 25th of January. They've made an order for about 4,000. The rest of the 3,000 are coming in about mid-February. So this is good news, right? It allows them to ramp up their business quickly. What I did like in this press release, guys, is that they've come out and said that their margins, right, are 70% for the first 10 days of January. This is absolutely enormous considering the margins for December were around 60%. So the business, right, is operating at a very profitable level, which, if they can make a nice rebound in the business, and crypto can, Bitcoin can come back, make a recovery, right, this could be good signs for that stock price going forward. Now, the strategies for Argo Blockchain remain broadly similar to Marathon Patent Group. I know a lot of you have made 200, 300% on this play. Don't feel bad for walking away, taking profits and enjoying them, right? Again, if you want to stick in this one, do set those stop limits, that trailing stop loss, right, to ensure, if it does dive significantly over the next few days, over the next few weeks, your profits are protected. So in terms of my plan moving forward, I have my stop limits on these two plays set as low as possible. I don't mind some short-term volatility. Now, in terms of my aims at helping you guys build long-term wealth in the stock market, as I've always said, I want us to be in the mega trends to ensure that we can enjoy that momentum and that upside that they can bring. And I do think crypto has its part to play. Now, crypto accounts for around 5% of my portfolio, so it's not a large number at all, and I'm very comfortable at keeping it at that. So as my portfolio increases, right, I'll continue to be buying crypto related assets. So that's my plan moving forward. So if you've been rocking with the channel, you know what time of the day it is. Question of the day time. This question comes from Philake. The question is, if a share price rises above 5%, is it a good idea not to sell and buy back when the share price falls 5%? So this is a good question. All right, guys, so first things first, just because the share price has gone up, it doesn't mean it's going to come back down. It depends on what type of catalyst has caused that share price to increase. So I'm going to give you guys two examples. The first is NEO. Now, we know NEO came out, did 7,000 plus deliveries in December. That caused that share price to break through the 40s, up to the 50s, and then into the 60s. Now, I call this a factual catalyst, right? I'm going to give you another example. EBOM, the crypto mining company. Now, they announced that they're coming out with a cryptocurrency exchange, right? This caused the share price to increase. And I said to you guys, if you remember, okay, let's wait for the dip. And I bought in the next day, right, when it came back down. Now, this is what I call a speculative catalyst. That crypto exchange is not ready yet. It's not on the market. It might never come. But NEO, they banked those 7,000 deliveries. So you have to distinguish between the two types of catalysts, and that will enable you to determine if that share price is sustainable, right? So I do think NEO share price is sustainable. EBOM share price will be sustainable, right? One, if crypto recovers, but two, if they actually launch that exchange. So that's what you're investing on, right? That's what you're betting on, them to deliver that to the market. Now, once you've identified what kind of catalyst it is, then you can set your buy zones accordingly. You guys know I always help you with entry points to the plays that I introduce you to. Now, do remember you can set your buy limit orders, right, using your apps. This is going to enable you to automatically get into those plays when the time is right, and you don't have to keep checking on that stock price. So while we're at it, I'm going to answer another one. Now, this question comes from Jake T. It's a follow-up. And he says, so you basically never take money out of your portfolio, but when will you? So again, another good question. So as you guys know, the majority of my portfolio is a long-term hold. Now, I do reinvest into those plays, catch the dip. That's how you maximize your returns and build wealth in the stock market over time. Now, I always have a watch list of plays that I'm looking at that are potential sells within that portfolio. Maybe their growth is slowing down, or maybe I can spot a better opportunity in the market or a better existing play within my portfolio, right? And I'll just sell out of that and buy that play, right? That's how I'm maximizing my return. Now, when it comes to fully exiting, my time horizon is between 8 to 10 years right now. So when it comes to 8 years, I'm going to stagger my exit out of my plays and making the most of the capital gains allowance while I'm at it. Now, I'll leave a link up to the tax video I did that goes through the taxes and the capital gains and everything, so you guys can see that and make sure that you're well up to speed with that. So that's what I'm going to do, and that's going to allow me to exit my portfolio, right, in the most tax efficient way. But again, this is going to happen over a number of years, so I'm in no rush to sell out of the portfolio. The main aim is to build as much wealth as I can in the stock market and have you guys on the journey with me. So as always, thanks for tuning in today. If you're new, do hit that subscribe button, become part of Stockflix. And as I always say, check into the channel each and every day. Stock market is rapidly moving and you never want to miss a beat. So I'll catch you guys in the next one.